Good morning, good afternoon, good evening, wherever you are. I'm your host, FD for Search5.tv, and today we want to cover some of the risks involved with the rising Bitcoin price. Yes, you get that right. The rising prices for Bitcoin and other cryptocurrencies, especially for Bitcoin in this case, do bring in increased risk. What do I mean by that? If you think this is an interesting subject for you to follow, please keep watching. But before I proceed, please note that I am not a financial advisor. I'm just some dude on the internet trying to bring you educational as well as entertainment content. You need to do your own research. Please do your own research. In this field we are in, cryptocurrencies is rife with scams and the risks are higher. And now that you got institutions, you'll think things will stabilize, but it could become worse or better for that matter. That's what we want to cover in this video, the risks increasing with the increasing Bitcoin price. What do I mean by that? Well, with institutions coming in through ETFs and some sovereign funds buying Bitcoin, when the price increases, they will want to take some profits so that when the price crashes, they can then go in and accumulate more Bitcoin, because there will come a time when most of us in retail do try and sell to take some lifestyle chips off the table. Once you've done that, the other guys can then go in, but they cannot go in with new funds. They want to go in with some profits and take all their opening capital or all their capital off the table and use those profits. That's what we want to cover in this video. So at the time of recording, Bitcoin is sitting at $111,078, having recently reached an all-time high of approximately $112,000. And this surge is attributed to factors such as favorable macroeconomic conditions, regulatory advancements like the US Senate disapproval of the Genius Act, and the increased institutional involvement. Now, let us explore some of the impact on Bitcoin's price under various large-scale sell-off or large-scale sell-off scenarios. Scenario one, let's just talk of the universal gradual sell-off. That normally happens when you're in a bull market. People do sell towards the peak, and we enter a bear market. Happens with any type of investment with any market. So the assumptions we're making here is that all Bitcoin holders will decide to sell their holdings gradually or all at once. Selling occurs over an extended period, allowing the market to absorb the supply. And the implications here is that a gradual sell-off would likely lead to controlled price decline as the market adjusts to the increased supply. Institutional buyers and long-term investors might view the price dip as a buying opportunity, providing some price support. And the price impact here of a gradual sell-off, I think if it's not a bear market, you may find that we go down to the 90 to 100K. But if it's a bear market, it might go all the way past previous all-time high of 69K. That's possible. We might see 50s again, if not 30s. Okay, that is on the gradual sell-off or when we are completing a cycle, entering a bear market. And scenario two is someone like BlackRock liquidating their entire Bitcoin holding. Their current holdings through iShares Bitcoin ETF holds approximately 574,119 BTC or somewhere thereabouts, and that is valued at current prices at approximately 63 billion. If BlackRock sells its entire Bitcoin holdings in a short time frame, there are going to be implications on the price of Bitcoin, of course, which is why we need to understand what we celebrate sometimes when you see these big institutions buying these large amounts, because they can decide to control the market, and they can with this type of bag they hold. So a sudden influx of 574,119 Bitcoin into the market could overwhelm the buy side, which means the market could panic, leading to rapid price decline. Other institutional investors might follow suit, exacerbating the downturn, because no one wants to be left holding the bag so that BlackRock can go and accumulate at lower prices. They all follow suit and do it at once. And who is being shaken off? Retail, of course. What's the price impact here? So immediate drops of approximately 25 to 35%, potentially bringing the price down to the 70 to 80K range if BlackRock was to sell all their Bitcoin. And here you're assuming that the market will absorb that. But if the market is acting likewise, the prices will collapse even further. Next, you got scenario three. You got strategy, formerly MicroStrategy. If it liquidates its entire Bitcoin holdings. I know at the moment we are banking on Michael Saylor's word where he keeps saying he will not sell. But what's the point of holding Bitcoin? I think the strategy holdings he will have to sell because that's business. Maybe his own Bitcoin holdings he won't sell. He said he will donate it to the world, the Bitcoin community. He might decide to burn it so that reduces circulation, or he might just give it away to the Bitcoin developers. I don't know what he's going to do in the end. So Strategy's current holdings sits at approximately 553,555 BTC, valued at approximately 61 billion. And yet the key assumption is that if Strategy sells its entire Bitcoin holdings rapidly, of course there are going to be implications. Similar to BlackRock's scenario, a massive sell-off will flood the market with supply. Given Strategy's prominent role in corporate Bitcoin adoption, its exit would shake investor confidence, and there will be repercussions as well, not just to the crypto markets and Bitcoin in this case, but with the traditional finance as well. I think that's going to happen. And the price impact for Strategy selling off their Bitcoin holdings could range from 20 to 30%, potentially reducing the price of Bitcoin to between between 75 to 85k, and that is if the market can absorb such a large dump BTC. Long-term impact will depend on the reasons behind the liquidation and market perception. I think with strategy, it's most likely going to be leverage because they are highly leveraged, highly leveraged. So that is a risk we need to monitor over time and see where things go. And with many copycats now following strategies approach, we may actually find out that the market itself structurally is getting broke or getting broken slowly, bit by bit, with all these people following MicroStrategy's approach, thinking that's the only strategy in town. Scenario 4, sell-off by all major holdings. Now, this will collapse the market. Definitely, it will collapse the market way below the previous all-time high, probably close to the 2022 all-time low, around 15.6k. I think we can go to that level again if all the major holders sell. BlackRock, Strategy, and other major holders liquidate their Bitcoin positions simultaneously. The market will face an unprecedented supply shock. Widespread panic selling could occur, leading to cascading effect. Regulatory bodies might intervene to stabilize the market because now it's part of TradFi as well. And the price impact here, we could see crashes of approximately 50%. And at this level, 50% at 110, you're talking of mid 50k range, which will be significant. Recovery will be uncertain and will take an extended period. And now let's consider some of the consequences of going higher from here, the price consequences of going higher from here. Because, not all of us are coming into this space just to experience decentralized finance. Some are coming here to mop up all the cash that is within our ecosystem. And what better way to do it than to use Bitcoin? I'm sure there are companies out there who are doing exactly that. If Bitcoin price continues to rise beyond current levels, you will see increased institutional interest. Higher prices could attract more institutional investors seeking alternative assets. Governments might implement stricter regulations as well to control the crypto market's influence on the broader financial system, because with traditional institutions joining the space, it then connects TradFi and the crypto ecosystem. They then become one. That then extends the risk to the wider financial market. Market volatility as well is another area where people need to pay attention. Rapid price increases could lead to heightened volatility, making Bitcoin less attractive as a stable store of value. That's to be expected. If you want to know our thoughts as well as far as Bitcoin price is concerned, especially the peak price ever, because I don't think Bitcoin will keep increasing in price forever. It's going to reach a peak and then probably stabilize a little lower than that peak, the all-time high, forever. Okay, so my final thoughts on this subject, guys. Bitcoin attracting increased risk as the price increases. Bitcoin market has shown resilience in the face of large sell-offs in the past, often rebounding after initial declines. But if all the major holdings are dropping their bags or selling off, who is there to absorb the liquidity? I don't think people want to catch falling knives. They want to see where the falling knives land before they make a move. So we might see the cascading effect if that happens. We've got to consider liquidity as well. The impact of large-scale liquidations depend on market liquidity and the presence of buyers to absorb the supply. Confidence in Bitcoin's long-term value proposition plays a crucial role in price stability during turbulent times. So investor sentiment is also worth watching. When that turns, what happens? Price collapse. So my final thoughts is that while large-scale sell-offs by major holders like BlackRock and Strategy could significantly impact Bitcoin's price in the short term, the long-term effects will depend on various factors, including market liquidity, investor sentiment, and regulatory responses. There will come something shinier, of course, but for now, Bitcoin is still the top dog, and people need to respect that. But as the price increases, so does the risk. It's something to pay attention to, because not everyone coming into this space are coming in for the decentralization credentials for Bitcoin. They're coming here to make money. I think we mentioned that in previous video. They're coming here to take your money, and they're going to use Bitcoin as a vehicle to do that. They're going to mop up all the cash, all the funds in this ecosystem and walk into the sunset. What are your thoughts, guys? Let us know what you think about our take that the increasing price of Bitcoin also brings in increased risk. Therefore, you should manage your risk accordingly. Any thoughts, let us know in the comment section. Until the next one, guys, this is FD for Sage5.tv signing out for now. Bye.